Welcome back, folks. In this video, I want to walk you through an analysis of where I think gold is headed. What's the next draw on liquidity for gold? Okay, and in the last video that I did, the pricing on that video it didn't show that we had closed on this hourly chart below this swing, right? So I've changed my feed because I noticed that the pricing was not the same as what I have it on my own brokerage charting platform, which is pretty clunky, which is why I don't use it. Okay, for charting purposes, but all my trades are from the broker's platform. Of course, I don't trade on TradingView. I only use TradingView to provide you with some analysis. Okay, so now that we have a validated breaking structure with a close below a swing low on a higher time frame like the 4-hourly chart, this down candle is therefore the change in the state of delivery, right? So this engulfment here is now a change in the state of delivery with this break in market structure because we've now closed below a swing low, right? That's the swing low that created this high. Okay, we've taken out high of the week. Came close to taking out high of the month. If we look at the daily charts, we came pretty close to taking that out. I'm surprised we did not. Okay, so based on this 4-hourly chart, this is now our swing low. Okay, these two down candles become our bearish breaker, and this up candle becomes our bearish order block. Okay, we do have a fair value gap from yesterday's trading and trading earlier in the day. Okay, so we need to be within these two down candles. Okay, and so I would think that we stay within this up candle. Okay, notice that this is on a 4-hourly chart, the 3-bar pattern where you have a move up, a wick up into some higher objective. Okay, which is that weekly high or the higher time frame high. Okay, then an engulfment. So we have that bearish pattern. And we could come back up as high as the low on that candle, okay? So you just got to manage your trade. But Monday, we'll know, Monday, Asia session or London session, we should start to see price move down, okay? So I'm looking for shorts now, given that we have a change in market structure. So on a weekly time frame, we kind of need to see where is liquidity, okay? Now, we could be reaching all the way back down to here. I'm not going to be targeting lows down there. We need to find an easy target. So we come into a daily time frame, okay? And I do believe that we need to move all the way down below this low, right? That'll be the easy target. Okay, so sometime next week, I expect the market to be back down here, 24.10. And I think the easy, after that, I'll be looking at these lows here, okay? I would not expect the market to go back below this line. So 2400 is a nice number, right? This is the mathematical target at 2401, which aligns with this small gap. Okay, let's actually mark that out as a gap. Actually, let's do this. And I think that's where the market needs to come down to rebalance this gap here. Okay, but the easy target is right there. So that's what I'm going to be looking for. Okay, that's what I want you to study. Okay, this is for your learning experience. Okay, so I'm not saying to risk real capital. It's for your learning experience. Study the charts, monitor price action over the coming days. Okay, identify where the market creates bearish signatures in each of the 3 sessions over the next couple of days. The Asia session, the London session, the New York session. That's what the purpose of this video is. I'm helping you understand how to identify future price movement based on current and historical price movement. Okay, this entire channel is about you learning how to read the tape. We are reading the tape. Okay, the market is telling us that it's shifting. The algorithm is telling us there's now a change in the state of delivery of price. Okay, it still needs to come up and do a bit of balancing before it reprices lower. Okay, and we're forecasting where that repricing lower could be based on where are their gaps. Right, we've taken liquidity, we've taken these highs. So I've always said you got to look at what's the market done. Right, where have we come from? Where are we going? Where have we come from? We've just taken liquidity. Where are we going? We are looking for liquidity and or inefficiency in the opposing end. Well, in the opposing end, this is liquidity. That's why that's the easy target. And this is the inefficiency, secondary target, aligning with a mathematical target. Okay. So that's kind of what I'm looking at as the high time frame objective directional bias to the downside. Now, I want to show you something that you can use to kind of add some confluence to where. So we have these two down candles, this bearish order block. This is the breakout. This is the bearish order block. It kind of needs to be within this zone. This up candle where the market may need to come up to balance is also in that zone. Okay. I'm going to take that off. What else can we use on a daily chart? Okay. look at gaps on the other side. Okay, so let's make this bigger. This is where we are. Okay, in this price range on the left hand side, are there any gaps close to where we kind of want to look for where the market will reprice lower from? Here's a gap. Okay, on the other side. So let's mark that out. Notice that how the bodies on this daily chart respect that gap. The rest of this is a stop hunt, right? You saw me earlier in the week exit a long position based on coming to this gap on the daily chart, right? One of my longs was using that as the exit. Notice how the bodies respect there. That is another indication that we've hit a higher time frame resistance zone. ICT calls that a pity array, fair value gap at a high. That's the last fair value gap that was left on this displacement down. We've now come back into it, completely balanced this market. And these wicks have stopped existing shorts. Didn't take out the entire high there. If it did do that, then that might have been a breaking structure for close above there for continuation, pullback continuation. So the market is not doing that because it doesn't want high prices in this market, right? That is evidence that we've come into a high. Had the market continued and closed up here, then that would have meant high prices to come. But because we have respected this fair value gap at the end of the month, right? This is now the new month starting, August, okay? This now has a completely balanced market. Something else to think about, okay? Not for our immediate objective, but notice that what the market's done here, okay? It's created liquidity. This is a, if we look at this on a higher time frame analysis, there's a lot of liquidity residing below these lows, okay? There's a lot of liquidity residing below these lows, and now there's more liquidity, okay? So at some point, the market is going to, so this is also creating liquidity, right? Liquidity here, at some point, the market's going to be coming down here, okay? It could be now, in the month of August, we get down there, okay? But that's not our immediate objective, okay? We want what's in front of us, what we can see right now. What we can see right now is this low, okay? And this inefficiency, that's it, okay? So now I've drawn this for you, using a daily chart. Let's go back to a full hourly chart, right? And notice that is also within the zone of where we're looking for the market to come back and rebalance and reprice, okay? So that reaffirms that this zone is going to be important for repricing lower. It still doesn't mean we won't come up to there. We may come up to there, but this is kind of where I'm looking for. So I wouldn't go, I'm not looking for entries anywhere below that level, okay? So it's from there to there. So very small, and it'll be in the midpoint. From that midpoint to there, it's kind of where I'm thinking we will get some repricing, okay? Again, I don't need to know that. That's just an area of interest. The rest is time. Look at what the market does in Asia, 9:30 p.m. Look at what the market does in London, 2:30 a.m. or 3 a.m. or 3:30 a.m. or 4 a.m., okay? Yes, there's a lot of times, but you need to just look at the market at that time to see if you get your setup, right? You need to be aware of what you need to see. Do you see that at those times? Okay, that's where studying the charts gives you the edge, gives you the advantage. Look at what 9:30 a.m. does, the New York session. What does 10 a.m. do, right? It's just like what I showed in my previous video. When you're looking for repricing lower, you need to find the bearish ICT signatures at the right time to identify turning points, okay? So I hope the video was useful. I will now talk with you in a future video.